Thank you for having me.
Okay, still talking commodities. Let's look at the global oil market today. Of course, prices edged up today for a third consecutive session over positive developments around COVID-19, even as China imposed new travel curbs and Australia reinstated restrictions to combat surging cases. U.S. West Texas Intermediate crude futures rose 10 cents to $72.86 a barrel, after jumping 2.3% in the previous session. Brent crude there gained 8 cents to $75.37 a barrel, extending a 1.8% gain in the previous session. The big gains on Wednesday were partly spurred by a larger than expected drawdown in U.S. crude stockpiles last week. Oil's climb has come even as governments reimposed a range of restrictions to slow the spread of Omicron. The market has shrugged off the potential impact of mobility restrictions on fuel demand because the Organization of the Petroleum Exporting Countries, Russia and allies, together called OPEC+, has left the door open to reviewing their plan to add 400,000 barrels per day of supply in January. Okay, and to get more details on some of those developments in the global commodities market, we have Dumebi Iyeke here. Hi, Dumebi.
Good morning.
Good morning. I mean, it seems every day we talk about oil, and
yes.
I'm sure it's understandable there. Oil is our major source of revenue. So
yes.
how the movement of the price would actually be of interest, to us. Yeah, even though we have seen oil edging up a little bit. And then just yesterday, the Senate passed the 2022 budget, and they have raised the benchmark for oil price at $62 per barrel. Now, seeing this dinged-up movement that we are seeing on the global oil market price, how realistic is this?
I mean, to be very honest, I think it's what we're cutting it close there. Even though it's still quite optimistic, we're really cutting it close, and that's because we've seen Brent fall to about $68 per barrel just this year alone. Even though the oil market has made some significant gains compared to 2020, we're still far away from what Nigeria needs to break even, and putting the budget benchmark at 62 is really cutting it close, because what if? Because right now the pandemic has become very unpredictable, and there's a lot of uncertainty surrounding that. And there's also this uncertainty surrounding global demand for oil. Even though OPEC Plus is quite optimistic, we're not seeing that much travel restrictions as 2020. But the truth is, we have to try to be as safe as possible, and this is really cutting it close. So we just have to keep our fingers crossed in the hopes that oil prices don't crash.
Well, keeping our fingers crossed and hoping, for the best. Yes, there seemed to be some kind of good news in the horizon regarding this Omicron. I mean, the US come out with a pill that can actually,
so that has supported prices. And the fact that the US dollar lost some steam. So, and whenever that happens, we are able to see a significant increase or some signal that demand is going to increase. And that's because a lot of this oil becomes less expensive for other countries that have other currencies. And then the drawdown in U.S. crude stockpiles is an inverse relationship between U.S. crude stockpiles and oil prices. The stockpiles, reduce significantly, signals that the U.S. will increase demand, anytime soon, and that, is positive for oil prices. And also the energy crunch, the fact that Russia has, stalled on some of its natural gas supplies, that has somewhat supported price, and this is because some countries have diverted their demand towards oil. So if all of these things continue, which is highly unlikely, we could still see oil prices maintain the positive trend.
Now, the Naira has remained relatively flat on the parallel market. That's surprisingly,
yes.
there. And you are attributing it to perhaps people coming in.
Yeah.
So,
So when most times during the festive season we see the Naira crash at the parallel market, and that's because there's usually an increase in demand for forex, especially for those that are traveling out of the country or traveling back to the country during the festive period. But that wasn't really the case this time around, and that's because there was a lot of speculative buying. Many people bought their dollars ahead of time and were able to plan for their travel ahead, even those traveling back into the country. And you also remember that there was a time that there was a lot of dollar shortages, so several travel agencies had to cut sales of tickets. So that also reduced the amount of people coming into the country, and that also affected dollar demand. So currently, with what's happening, we're seeing that play out in the parallel market rates.
All right, it's Christmas week, and we have seen inter-rate transport fare rise. Now, to what extent are we likely to see this stoke inflation?
Well, this will definitely have some impact in inflation numbers for December, and we could see some of it, trickle into the inflation numbers for January. But that's very the impact of that will be pretty
For
slow.
December, you mean?
No, for December, it will have a significant impact, but we could also see that impact, trickle down into January, but it would have a very minimal impact. December is where we're going to see a much bigger impact, and that's because a lot of people are traveling right now for the festive season. A lot of people are traveling home or traveling back from home to Lagos, so we're seeing a lot of that. And when there's an increase in demand for any commodity, even transport services, the price usually increases, and that's exactly what's happening, and it will have an effect on inflation.
And while we see transport fare rise, your slide also says food commodity prices are trending down, and you attribute it to sluggish demand and consumer resistance. Are you sure people are not buying? I mean, I see a lot of activities. People are still buying.
Nigerians know how to adapt.
Absolutely.
But the thing is, majority of people are not exactly spending as much as they would. So even if a family that would probably have bought a cow during the Christmas period has settled for ram. A family that would have bought ram has settled for goat. So people are still buying, but we're clearly not seeing that much response as that would normally would say, okay, this is attributed to the festive season. So we're not really seeing that. Demand is not as high. And remember, I think I mentioned on Tuesday, so we noticed that a lot of retailers, a lot of even wholesalers, they're not really stocking up. So it's what they have currently that they're just trying to push out and sell off.
They're not adding any price.
Yes, they just want to sell off. So and the fact that demand has somewhat is sluggish, but I mean it's still the festive period, so people will still buy that gallon of King's oil or a gallon of power oil. So people are still doing that, but it's not just as much as before.
But I'm sure we'll make our time to actually get into the market
to see how this is really happening. Yes, exactly.
Okay, now the MBS is reporting a decline on Nigeria's terms of trade. What is the implication of this for the country?
So terms of trade is the ratio of a country's value of export, or we say export prices, relative to import prices. So what this means is if your terms of trade is improving, it means that the value of your exports is higher than the value of your imports. And if your terms of trade is declining, it means that the value of your exports is less expensive than the value of your imports. So with our terms of trade declining, it clearly means that we're importing more than we're exporting, and even the commodities that we're exporting at a cheaper price than what we're importing. So that's what that terms of trade number is telling us. So if you really look at the report, you see that we're saying that the terms of trade declined as a result of a decline in export prices. So that's exactly what that is just telling us, and just clearly emphasizes the the need for the government to improve efforts towards adding a lot of improving the value chain of a lot of commodities that we export, so that it's not just raw materials that we keep exporting, because raw materials are extremely cheaper than finished goods. So imagine we're exporting crude oil, but we're importing refined petrol products, and that's going to be more expensive than the crude oil that we're exporting out.
And your slide also says, of course, gas prices continue to surge in
Yes.
Europe. Cooking
Yes.
gas price in Nigeria is still,
It's still
you
up.
know, still
Yes.
up
Yeah.
there. But how will this impact these terms of trade again that
Yes,
we are
yeah.
talking about?
So in the global space, once commodity prices are higher, so exporting countries like Nigeria do benefit from it. So with gas prices higher, you know, LNG is one of our major export commodities. So if if the global natural gas price is high, it means that Nigeria will benefit. So this could, you know, support our export earnings from LNG in the near term.
All right.
Yeah.
Well, as the year gradually, you know, winds down, so what's your outlook on agri-commodities and, of course, the oil commodity?
Okay, so let me start with the agri-commodities. So for agri-commodities, we clearly are going to continue to see some initiatives and interventions from the federal government and the CBN to boost production of certain agri-commodities that we have comparative advantage, like sorghum. You know, we've seen the government say something on that. We've seen government say something on rice production, even wheat as well. So we'll definitely see a lot more interventions in the agri-commodities space. However, insecurity that's still, you know, plaguing the food belt would be a huge cause of concern, and that could, you know, continue to affect food prices, affect food prices, and then also logistics costs, because by the time the fuel subsidy is removed, we would see that impact in commodity prices, and that, you know, could stoke inflationary pressures. Then moving to oil, I feel like the country will still, you know, be susceptible to vulnerabilities in the oil sector, and that's because right now oil prices are, you know, are determined by a lot of external forces.
Factors,
yes, so that's
and
Omicron,
our
OPEC
production
plus,
is also
and
not
production is still
up to par.
exactly. So
And
we're
then we
still,
just got
yeah.
Shell halting flows from Forcados
Exactly,
terminal. That's
exactly,
also
exactly. So lower production from Nigeria's part is really going to continue to affect our earnings in terms of oil. And you know, oil accounts for almost 90% of our external revenues, and in about 70% of our government revenue. So all of this is going to still play out and, you know, be a huge cause of concern.
all right. Thank you very much, Dumebi. Well, it's Christmas.
Yes, it is.
Are you inviting me for some kind of
Yes,
turkey?
we have jollof rice.
That would be great. I think I'll honor that invitation.
No problem. We'll be glad to have you.
Thank you, Dumebi.
Thank you so much.
Okay, we take a moment. We'll be back.